Hello there. This is James, and you're watching the latest episode of our Primus Live webinar series. And Happy New Year. Just so you know, we're about to start in probably about 5 minutes. I'm excited. Hope you're excited too. And I'll see you very, very soon. Hello there. This is James, and Happy New Year. And you're watching the very first episode of the Primus Live webinar series in 2021. Now, before I introduce to you my very special co-host and the topic day. Remember, these little live broadcasts of ours are for educational purposes only, and in no way whatsoever should be taken as advice. I always suggest you do your own research and do your own due diligence and know the risks at hand before entering any trade. So let's get on to introducing my special co-host, which, to be fair, she doesn't really need an introduction because you know her already. And her name, of course, is Kaya. Kaya is our senior market analyst here at FX Primus and has worked as a portfolio and investment manager with exposure to both public and private markets. Before FX Primus was so lucky to get her, Kaya was a senior investment associate at a hedge fund in Singapore and vice president in Bank of America, Merrill Lynch. Welcome, Kaya. Oh, I think there you go.
Hi, James. How are you doing? Happy New Year.
Happy New Year indeed. Happy New Year indeed. And as you can see, ladies and
gentlemen,
exactly. We start off the new year, both working from home. So, you know, there we go. That's something at least. Exactly.
I think it's
How was your New Year's?
It's been great. Thank you for asking. I was just going to say, I think it's easy to forget that we have a new year, that given we have so many events already in 2021. I feel like the first 7 days of January have been event-packed completely.
Absolutely. I mean, already it's only the 7th, and already we've had a major event happen, which is sort of like I've never witnessed anything like it before. So I'm hoping that it's not a foreboding to how the rest of the year goes.
Yeah, so just for those listeners who haven't turned on the news yet, today is historical day for a couple of reasons. So the first reason is that the sitting US Senate has certified Joe Biden to be the next president of the US. And that announcement triggered large-scale looting and rioting in Washington, D.C., which culminated with the rioters actually breaking into the Capitol Hill building, or Capitol Hill, I should say. This has not happened since the 19th century. I just did a random fact check earlier. So within 200 years, completely unprecedented event. And the second thing that has happened is that, sorry, James, go ahead.
I was just going to say, yeah, it hasn't happened. The Senate or the Capitol hasn't been invaded since 1812. That was the last time it was invaded, and that was by Britain.
That was by Britain. That was by Britain.
By Britain. Yes, it was.
And the second historical event, maybe not that historical, I suppose, but in the context of this election. It's that the two final seats for the Senate are now confirmed, and these have gone to Democrats. So Democrats now have control of the entire Congress, and this means that we have a wave that we have quite a few times with you on Trump and his policies next onwards. There will be another round of elections. So Democrats definitely took this election.
Mm-hmm. It is. And like I say, clearly this could potentially help, obviously, the president-elect now, President Biden and Vice President Harris, get through many policies, or clearly he wants to go. Well, hopefully we'll take some obstacles out of his way when he obviously takes the big seat come the 20th of January.
Agreed, yeah. I mean, he will definitely not be able to implement every single policy of his with complete sort of obstacle-free path, because there are still a bit of discussions even within the Democratic Party if the stimulus should go to that extent. But nevertheless, we will not have the gridlock that we have seen for the last 2 years.
Yeah. So, like I say, there is two major events, literally, and it's only 7 days into the new year. But anyway, let's go on to how the market. Only 7 days. Only 7 days. So let's move on to what's happening in the markets over the last 7 days.
Sure. So we have, again, prepared some slides for you guys. If we're going to pull up the first one that we have, it's just a brief sort of summary where we stand as of January 2021. So James, interesting thing, as I was updating these slides, I was using our 10th of December sort of presentation. And globally at that point, we had 69 million COVID cases. So now, less than a month later, we actually have 87.7 million COVID cases worldwide. And the deaths have increased by 200,000, which is quite remarkable, I would say, that within 1 month period, technically even less, we've had such exponential growth in both the cases as well as deaths.
Wow. That was the 10th of December.
That was the 10th of December.
Whoa. Okay.
So US is still number one. You know, they want to be number one, so they lead with COVID cases as well. What's interesting, though, is that the equity indices both near all-time highs, the two main ones, which is S&P 500 and NASDAQ. Russell 2000 just hit an all-time high yesterday at the back of ISM manufacturing data, which was better than expected, I think, at 60 versus expectation of 55. Noteworthy that US Treasury 10 yield is first time above 1%, and this is since March 2020. Those traders who actually monitor credit markets as well, they know this is noteworthy because US Treasury yield tends to be positively correlated with inflation. So I would say inflation trade is visible very well from that US yield picking up now after 9 months, basically. Another great inflation indicator is oil. So oil is trading above 50 for the first time since February. And VIX, which is the fear indicator or sort of the volatility of S&P 500, is still elevated. So even though we are reaching equity all-time highs, VIX has not gone below 20 since March 2020. And, in terms of currency pairs, Euro, GBP, Aussie, Kiwi, all trading swing highs that we haven't seen since April 2018 versus yen and franc that are trading opposite direction to dollar clearly, but the levels we've last seen is 2016 and 2015. Now, I did those slides before, let's say, we got the big events happening during the day when Donald Trump actually accepted that Joe Biden is going to be the president. So I see already some currency movement. So, a bit of lag between doing the presentation and actually presenting it to you guys. And lastly, which I know you're going to love, is that Bitcoin is trading at all-time high at 38,000 at this point.
Yay. Good for Bitcoin. Yeah.
Good for Bitcoin.
Yeah.
What do you think about Bitcoin? Tell me.
Bitcoin. Okay, well, look, I covered a lot about Bitcoin where we had the really big bull run back in 2017. And I was a market analyst for a different company back then. And I did a lot of articles on my views and my opinions of Bitcoin. I did so many that year because it's the only thing everybody wanted to talk about. I'm a bit, I don't like it now. I'm really sick of it. I'm pleased there's other people out there who love it, which is great. And like I say, it's a great asset to potentially trade as a CFD as well, which we obviously have available. And I'm pleased for those who are excited that it's hit 38,000 on the way to 40. Probably next step 50. So I'm pleased for them.
And James, how do you feel about the parallel that, a lot of those, I would say, crypto promoters, and not just crypto promoters, I would even say sophisticated investors these days, such as pensions, for instance, they say that Bitcoin now is electronic gold. It's sort of storage of value, something, you can't take away. How do you feel about that?
Yeah, I actually wrote an article about this back in 2017 where I discussed whether or not Bitcoin was the new gold, as in the new sort of potential safe haven type thing. And because there was a comparison back then when gold was moving higher. It was actually during the time when Trump and North Korea were having a little spat. Gold reacted and went bullish for obvious reasons, the safe haven. And Bitcoin did the same thing. So it sort of mirrored a little bit of gold. So I can understand that many people view it as a potential safe haven because it's one way of obviously locking your money away or your value of capital away into a different asset. But as you've already said as well, why is it very, very different all the instruments, the assets we've spoken about, S&P, NASDAQ, Russell 2000, oil, euro, sterling, Aussie, Kiwi, they're all risk-based currencies. And the safe havens like the yen and Swiss franc are suffering. The VIX is suffering. But Bitcoin is still riding high. So maybe that stance of it being what I thought it was, being similar to gold back in 2017, has changed slightly. Because clearly it's not suffering with this risk appetite we have on the market. I do actually have a question coming from one of our many members who are asking. The question is, Kaya, what do you think of the impact on the dollar due to the current political and COVID crisis in the US? So
very open-ended question, extremely open-ended question. I'll try to dissect this into two parts. One of them, the political situation in the US, the other one, the COVID-related topics. Yeah. So if we talk about the blue wave, and again, those who were with us back in November, we had a very good session about US elections. What is the implication of the blue wave on US economy, world economy, and also to US dollar? So first and foremost is that now Democrats have pretty much carte blanche to do fiscal stimulus, and they're going to do a lot of fiscal stimulus. So we're going to see a lot of investment going into infrastructure, green energy. We're going to see definitely more support to average Joe in the form of checks. We're going to see support for small businesses, and this is expected to be inflationary. And inflation, as you know, tends to push the currency slightly lower. And I fully acknowledge that US dollar, let's say measured by DXY, is currently 2.5-year low as well. So it's just hitting, actually, no, it's not hitting, it's 89 at the moment. So it was briefly kissing 90 levels. But I would say dollar is rather to be on the weaker side at the back of this. On the flip side, if US economy really picks up, if Biden does the miracle and you're going to have GDP growth again next year, that's going to be positive for the dollar. So I would say it's really the sort of the very subtle game between the economic growth versus the inflation. If inflation is going to be much higher than expected, the dollar is going to be weak for sure. Now, on the COVID topic, short answer, who knows? Who knows? Very hard to make predictions, but in general, US dollar tends to be the safe haven currency when really things go bad. Like you saw this in March, for instance, the dollar just skyrocketed completely. So if we come to a point that we actually have panic again in the markets because of COVID, I think dollar will be stronger. But at this point, I think we've discounted all COVID things. We're just hoping that the vaccines are going to be with us soon and, effectively for everyone.
Yeah, well, like you've already pointed out, the market is not paying attention to the threat of COVID so much at the moment, or the political situation we had yesterday, because obviously, like you've already understated, S&P 500, Russell 2000, everything, risk assets is riding high, risk is on. So for now, the market doesn't really seem to be worried too much about that.
No, not really. A few people have reached out to me from our community asking what could be the sort of catalyst event, for the markets to actually to go south. And again, it's very hard to pinpoint one particular event because the markets just seem insensitive to pretty much everything. So I think it's the same mindset that market players sort of adopted back in 2008 when the bad news became the good news. Because automatically this meant more stimulus from the central bank. And, since March, US Federal Reserve Bank has pumped $120 billion into the economy one way or the other every month, which is, unbelievable how many zeros is in that number. I think it's 12 or whatever, 9 actually. But the point being is that the markets really expect the Fed and the federal government of the US to step in when things go bad. And that's good for asset prices.
Yes, of course. Until the time they have to actually pay the money back.
Who has the money to pay all that back?
and exactly. Yeah. That's a problem for maybe another decade, maybe.
Exactly. But, that's where our history is all. But that, there's a very interesting thesis that one thing that would actually save a lot of the major economies is debt jubilee. And we can do a session on that, what that actually means. But, this idea is getting more and more, attention, I would say, which basically means forgiving of the debt. Government is going to say, we're just going to say, they just
write it off.
It never happened.
Yeah. Like, actually, we should do something on that, because that'd be quite an interesting topic to do. But I wonder how easy that would be, because I remember a little while back there was a debate trying to wipe off African debt that countries are given to Africa, and they said they couldn't do it.
I think the only way really is the Fed to take all the debt within the country on their balance sheet, and then the federal bank actually writes off that amount. But again, how do you treat that in terms of confidence in the dollar? How would that impact that? But again, the topic for another time. So I think we're getting
totally there. It was just interesting. Anyway, talking about topics. Should we move on to the topic of the day, which is called?
Sure. I just want to show you one more chart before we actually jump to the topic of the day, which is the vaccination plan. Oh, sorry.
Oh, of course, yes.
I see Mike is actually ahead of us slightly. Mike we decided we're going to show us a couple of the charts as well before we actually jump to the slides. I just want to show you how asset prices have reacted, first of all, to COVID, political situation, and whatever else is going on in the world. So the first slide I have the first chart I have open here is S&P 500. Very colorful charts. Again, those that have been with us before, they know I like to use rainbow color for the moving averages. So what I could read from this chart, again, we're hitting all-time high on S&P 500. We're breaking the upper Bollinger Band resistance, which is again noteworthy for technical traders. And at the same time, our RSI and stochastics are not even overbought levels yet. So there's definitely...
Can we bring the chart up, Mike? Because I don't think people can see it at the moment. Is it able to be shared on the screen, the chart?
I think the chart is actually on the screen.
Okay.
I'm not 100% sure why you can't see it, my friend.
Okay.
Can somebody please pop us a comment and say?
No. Tell you what. It's actually from my side. I can't see it, but I just.
There you go.
Michael, our producer, has confirmed it is there. So I'm just going to have to trust your word.
You have to trust me this time.
I trust you all the time anyway. So carry on.
I shall tell you that S&P is.
There I see it. There you go. Okay.
And just one comment about the strength of the trend. So I like to use also the ADX and DMIs. So ADX actually showing that the strength in that trend is weakening, or actually it has been quite weak. Hovering here at 15 levels and being quite stable. So we want to see ADX above 2025 to really confirm that there is strength in the trend. As a technical trader, I would say very bullish momentum, not a great entry point. I would wait probably. I also want to show you Russell 2000. So Russell 2000 represents the smaller companies in the US. Now, what do you think of this change? 1 day change for Russell 2000. Honestly, I was mind blown. 3.9% in one intraday, basically, at the back of the ISM announcement. So this tells me that the investors really bet on US economy recovering fast. On the other technical side, RSI is just barely overbought. Stochastics is still neutral. And whilst we saw a bit of decrease in ADX, which shows the strength in the trend, I think it's now picking up and could be pivoting again to the higher side. Again, very bullish momentum, not a great entry point. And then I want to show also oil. So I'm using US oil, which is basically CFDs. So we've broken the 50 price point. 50 tends to be, first of all, let me rephrase that. Those round numbers tend to be psychologically very important for technical traders as well as for algorithms. Algorithms are often programmed around very round numbers. So 50 was the important psychological barrier, I would say, that now that we are above 50, I think you're going to see quite a lot of institutional investors looking into allocate into oil again. Before that, I think many of them were just sort of keeping their distance because, it was It was very low in the historical context. It was negative just, how many months ago? Maybe 9 months ago, 8 months ago in April. But now seeing this very bullish momentum happening, seeing a lot of energy in the momentum. So ADX is currently at 36.5, tells me that there's plenty of room to go for oil higher. Just wonder. I'm just going to show US dollar as well, because it's almost sad how weak the dollar is right now. Great for shopping, whoever orders stuff from US though. So assuming that deliveries actually happen.
True.
So the weakness of US dollar is just being devastating, I would say. However, again, on the 7th of Jan, we saw the reinflation trade. So this was basically at the back of yesterday's news flow. The dollar sort of broke the resistance of 8-day moving average. And RSI stochastics are sort of neutral, although stochastic is flirting really with being the oversold levels here. But dollar definitely trending lower. From technicals, I don't see much recovery in US dollar in the near term.
No. So the bulls are fully in control then, by the looks of things currently.
Bears for the dollar.
So the bulls, as in reference to the riskier assets.
Correct. From that perspective, you're 100% right. Yeah. So the US dollar tends to be sort of moving in opposite direction to equity markets.
Yeah. Wow. Well, there we go. So, though the start of the year, we've had some famous instances, the markets don't care. They're moving on with optimism as they left off in December 2020. So that's good. Very good.
Alrighty. I think with that, let's pull up the slide that we had for a second, which shows the vaccination. Sorry, not vaccination plan, but vaccination. That's a mouthful. That has taken place. I would say quite encouraging. I mean, Israel has done amazing job. UAE has done an amazing job. Looking at the left-hand chart, which shows doses administered per 100 people, and very proud to see my own country there. Not in the top 10, but Estonia is there with 0.38. So yeah, getting there. I think I mentioned the last live that my aunt was getting vaccinated because she's a frontline worker and no side effects. So all good on that side.
Very good.
Very good, yeah. And the second chart on the right sort of shows the, let me see, it's a total number, but it considers this vaccination as a single dose. So there's, 2 doses to be had, I think, for most vaccines. UK has sort of diverted from that plan, as per my understanding, that they're not going to do those 2 injections within 2-week periods. Just going to postpone that.
Yeah, UK make their own rules up, don't they?
UK make their own rules, exactly.
People.
So, I mean, I have to say, like, looking at these numbers, I get a bit of hope. Like, maybe normality is gonna be restored. Hopefully, soon, one day. Maybe we're gonna have summer holiday.
True. We can go back to our normal way of living. But then, like I say, this is encouraging that they've grabbed this and they are moving forward with as many vaccinations as possible. There is a little bit of a concern though about the new variant, isn't it? The effectiveness on the new variant.
Yes, the new strain, yeah.
Yeah, so there is that slight concern. But at the moment, we're pushing ahead, trying to get things back to normality. So let's hope we can get there soon. Definitely.
Fingers crossed.
Fingers crossed. And toes.
And toes, yeah. And with that, we're going to move on to the most important slide of the day, I think.
The topic. Exactly, the topic of the day.
Technical patterns.
Yeah, so take it away, Kaya.
So, I mean, we've spoken about technical analysis quite a bit here, and we really haven't covered the basics. What are the patterns on the charts? Why do they matter? And how do they form in the first place? So I think before we even go into the technical patterns, I would just say that all the prices are driven by human psychology. Although 60% of trading is algo-driven these days, algos are still programmed by people, and they are programmed using the same statistical tools. And, sure, you can have some sort of tilt or some sort of factor orientation when you do your trading, but nevertheless, you still use the same tools. So it's the same Fibonacci's, it's still the same probability distribution, the same standard deviation. So overall market activity is very much driven by the same factors. And for humans, two things that motivate us. One is fear, the other one is greed. And we spoke about this 2 weeks ago, 3 weeks ago, when we did a session about the trading psychology.
Yeah.
So fear and greed, which means that whenever the prices drop too low, at some point there will be buyers. And whenever prices get too high, at some point there will be sellers, because people are either fearing losing money or they get really greedy and they want to jump on the bandwagon, basically. My favorite example of that, and James, you probably remember this, during March or maybe April, a small company called Hertz went bankrupt, declared bankruptcy, which is being sarcastic here. It's not really a small company, it's a big company. It's a car rental. So they basically declared bankruptcy. Their bonds went basically 10 cents on the dollar, but share price went up because people thought at some point there would be subsidy, there will be a bailout, and the equity investors are going to have an upside. So that's a perfect example of greed taking place. Bankrupt company that has basically no possibility of surviving on its own. Somebody came in and started pushing up the price. But coming back to patterns, we all look at the same charts. We all have the same tools. There's no magic key when you are a technical trader, except maybe the ability to see a bigger picture, or maybe to make a better sense of the data. But in general, we all have the same data set in front of us. And while the trading using technical variables, it's never predictable. It's predictable, it's never certain. We always deal with some sort of probability. And generally for the patterns, there's two types of patterns. There's continuation patterns, there's a reversal pattern. And we're going to cover 5 of those today. And we have focused on the bullish side of it, but the opposite is true for the bearish side of it. So if anybody doesn't understand, just send me an email later, I'll explain it to you. So double bottom, one of my favorites. So easy to know, so easy to find on the chart because it's literally W. And I think for many of these patterns, it's two things that are important. It's the shape of the pattern, but also the volume that supports that pattern. And for this particular one, it's very important to see volume picking up when you have that bullish reversal. I would say without volume picking up, I wouldn't even consider that as a confirmation that you have a double bottom. So you need to see definitely how's the volume acting in relation to the price action. And the double bottom normally takes a longer time to form. So for me, I would say 2 months maybe is a good time frame to look at double bottom.
Like I say, it's for patient traders, isn't it? It's for like people who want to look at maybe jumping in for a position trade, because like I say, it takes a little bit of time to form. So it's a patient pattern to recognize.
I love patient pattern. That's a good term.
There you go.
It's a patience pattern for sure. Yeah, one thing I don't have is patience. So I'll try to work on that. The next one we have chosen for you is the ascending triangle. Again, quite easy to see on a chart. And it's a continuation pattern. I should have mentioned that the other one, the previous one, was actually a reversal pattern.
Yes.
So this particular one is continuation, and it can actually give you a signal for two directions. If the price breaks the resistance level, definitely bullish sign. So I would consider this as a buy signal for me. And once the price breaks the support level, that's a bearish signal. However, I would not use this as a sort of key point to make my decision about a trade. I would just look at it, something weird happening here. And again, it's the volume that's important. So you want to see expansion of volume when you have those breaks, in particular the one when you break the resistance. Alrighty, next one we have is cup and handle. I don't know if you agree with me, James, but I would say this is a bit more tricky to pick up on a chart.
Yeah, I think, like I say, the thing with chart patterns, So some patterns are quite easy to identify, but other patterns does sort of take a sort of a very trained eye to identify it. And there's always that little shadow of doubt in your mind that are you seeing the proper pattern, or are you trying to see something which isn't there, so to speak? But yeah, the cut pattern is in particular a very much a difficult pattern to identify unless you have that sort of trained eye. So I totally agree with you on that statement. But take us through a little bit what the cup and handle pattern is.
So cup and handle is also a continuation pattern. And the key here is once you see the handle being broken, that's your bullish signal. But again, you have to keep in mind that the volume has to pick up as well. With weak volume, you're not going to have the price action that you need. And you may just linger there at that level, and God knows for how long. And what's also important is that the handle bottom is often key resistance level. So what I mean by that, often you're going to see, let's say, 50-day moving average sort of offering the support whenever the handle bottoms. So again, if you are trying to find some sort of pattern on the chart, moving averages sometimes help to accompany your analysis because they just show some critical resistance and potential reversal points.
Yeah.
The fourth one we have for you should be flag. There you go. Flag is I would say sometimes easy to find, sometimes tricky to find. And the reason being is that depends what time frame you trade, but then there can be quite a bit of noise with the flag pattern, and you can have even smaller patterns within the flag pattern. In fact, you can have smaller patterns in every pattern. But the flag one, sometimes it can be a bit like, 3-year-old has drawn something, never as clean as this particular chart shows. But if you're able to draw some sort of parallel lines, that definitely forms a flag. And the moment you're going to have a volume expansion with that ascending sort of pickup, I would say that's definitely a bullish sign, and that's a good, I shall say, potential entry for a trade, because it's not an advice.
And not trading advice, remember, not trading advice, potentially.
Potential entry, yeah. But if the price goes to the other direction, meaning it never actually breaks the resistance, then I would say either the trade is going to linger or it's going to just crash. I would not take that trade. I wouldn't consider this as a good signal for a bearish trade.
Yes.
It means weak signal quality for me.
Which is, like I said, the other patterns we discussed, you just sort of reverse them if you're looking for a bearish opportunity. With the flag, though, you're saying, to be fair, there isn't any really a reverse pattern for this. Is that right?
I suppose it depends how the flag pole is in relation to the flag body. So it can be bearish as well. But again, you have to look at the combination. So in that case, it's combination of the volume and the price action. So for the bearish trade, you would want to see the volume picking up as the price goes down.
Good.
So flag pole is also very important to keep in mind when you look at the flag pattern. And the pole is also important for the next pattern that we have, which is the pennant. And pennant is sort of like a flag, but sort of the triangle is descending. A bit trickier to pick up on a chart, I have to say, but every now and I'll just mention that when you start drawing these formations, it's never as clean as you would like it to be. It never means that the price action stops exactly where the previous price action sort of took place. So you will always have the candles that are slightly above or below, because when we talk about trading, we always deal with ranges, not with sort of absolute price points. So even for this particular one, you can see that the large candle has broken below the resistance in the early formation of the pennant body, which is completely okay. So as a technical trader, you sort of have to have to ignore peripheral vision and have to look at really the core of the formation. You will always have candles that don't fit into the main body, but nevertheless, the sentiment is there.
Yes.
And by sentiment, I mean, again, the emotions, the fear, the greed, everything.
Got you.
Yes.
Got you.
That is the 5 formations I have prepared for today.
That's good.
Very basics, I think very important. Every now and then, when I do my market update during this particular live, this live series, I do have some of those drawn on my charts. Maybe whenever we do the next formation about pattern, next live about formations, I can show live what I see on the chart, just to sort of complement the theory with the practice.
That'd be absolutely brilliant. As I say, ladies and gentlemen, this is only part 1 because chart patterns is such a huge topic, and there is so many of them, all with their different fancy names as well. I love some of the names, by the way, they give these patterns. Don't you? They're fascinating. They're fascinating. Do you know my favorite one? Just I'm going off slightly off topic. My favorite, and it's actually a candlestick pattern. My favorite one is, and it sounds quite horrible, is the abandoned baby. I mean, the abandoned baby, and that's anyway. But that's for a different topic. But like I say, this is part 1. Go on.
And then people say that people in financial industry don't have any creative mind. Please,
exactly.
We are very creative.
Very creative. But yeah, definitely in part 2, I think, of patterns, which we'll definitely do more, and we'll do some candlestick patterns. Definitely try and do it live on a chart, because I think what a lot of people struggle with is when we sort of explain it and show it, is drawing the lines themselves. So if we can show them to do that, that would be absolutely brilliant. We'll definitely do that.
And most trading platforms have some sort of inbuilt tools.
Yes.
I know some platforms even have the option to tick a box, show formations, but then you're going to have thousands there. So the system is just going to draw lines all over the place. I wouldn't say there's much value add in that. However, like with anything, it's just a matter of practicing. Just start drawing, and at some point you're going to start seeing those formations. One important point I would like to make is that when using formations, this is never, at least for me, the key decision point or decision-making point. I would say these things rather complement whatever analysis I have done in the past.
Yes.
And either they're going to confirm or they're going to reject my thesis. So again, we've discussed this, how to enter a trade. You form a thesis, you have your checkpoints, you write everything down, obviously. And then when it comes to me, I look at my moving averages, I look at the RSIs, the stochastic, ADX. And then before I enter the trade, I'm like, perhaps is there also a formation that's going to confirm my thesis, or it's going to say, nah, just don't do it. But never purely based on the pattern on the chart.
Yeah. So like, again, it's a sum of all parts, not just one thing, to make your decision, which is brilliant. Okie dokie. Well, look, that's the very first episode of 2021. There you go.
The very first episode.
Yeah, exactly.
And given that we are both in our living room, we haven't had any internet issues. We haven't had any uninterrupted, I don't know, disturbance, I shall say, yeah.
See, I have my little cat in the corner, one of my little cats, and she's been as good as gold. She's just been fast asleep, which obviously means she's found what we talked about really engrossing, or she's just simply not a trader.
I think my construction guys upstairs are the same as her cat. They've also fallen asleep because I can't hear drilling sound coming.
Oh, that's brilliant. Well, okay. On that note, let's sign off for the day.
Do we have any questions before we?
I don't know. Like I say, before we sign off, is there any questions anyone would like to ask us live on Facebook? Because obviously this broadcast is on Facebook.
Sure.
Like I say, don't be shy. Give us a try. You ask your questions by all means. See if there's anything in particular. Okay. No, I think at the moment,
while we're waiting for the questions, I'm just gonna open in parallel my own calendar, and I'm gonna read you the plan for our future lives. So we have a few events lined up for the month of January. So the next live we're gonna have is next Wednesday. My Google Calendar is a bit slow at this point. Not to be worried. next Wednesday, we're going to talk about candlesticks. So most powerful candlesticks.
Mm-hmm.
Then on the 20th of January is very special and very important Primus Live about inauguration. So it's Inauguration Day special, what to expect from Biden and his policies. So we're gonna, hopefully by that moment, the dust has settled. At this point, really, I think the next 13 days, God knows what's going to happen. Anything can happen, I think. But I think by the 20th, we'll more or less know. And I'm sure Biden will give a few speeches as well, like what's his plan for the first 100 days, blah, blah, blah. He's given some indication, but, not too many details at this point. Yeah. And then on the 27th of January, we have major currency pairs and strategies for trading.
Brilliant. That's going to be a good one. That's going to be a really, really, really good one, that one. You see, even woke my cat up. My cat heard that and she woke up. Even the cat got interested in on that topic. Okay, actually, I've got so that's going to be a really good call, a really good session to attend. Certainly, so actually, all of them will be excellent, but that one in particular, I think, will definitely be good. And
just for the sort of color to give how we choose the topics. First of all, these topics are coming from you. Yes. We get comments, we get feedback, we get questions. So that's how we come up with the topics. And we try to balance, I would say, educational side of it with giving the market color and also the technical versus the fundamental. Absolutely. So every now and then we do deep dive into technicals and then we jump to maybe slightly softer topic about fundamentals. So
yeah. Okay, like I say, we try and give you the overall picture of everything. I've got a couple of questions that have come through now from the people watching us live. Okay, this question is, okay, what happens to Bitcoin when a COVID virus hits technology? Which I think is a bit open-ended and a bit.
Hits technology.
Hits technology. So I'm guessing the question is if technology firms have employees who get hit by COVID, or
when it comes to Bitcoin, I think that, and again, James, maybe you are better positioned to answer, but I feel that at this point we lack the tools to analyze the value of Bitcoin. Yes. With other asset classes, I think some sort of tools have been configured. You do some sort of correlation analysis, let's say when it comes to gold or silver, or use case for gold or silver. Some of it actually can be used for some sort of manufacturing process. With Bitcoin, it's just nothing. At this point, it's nothing.
Yeah, I mean, they were, okay, again, as you know, I'm a big Bitcoin fan. But anyway, a couple of years, 2017, again, you rightfully say, I think the problem with Bitcoin is it's not like a typical asset, which has price patterns and price history. We know what fundamentals particularly drive them, risk on, risk off, this, etc. And I was asked a lot of questions, what technical analysis works with Bitcoin? This is back in 2017. And I said, nothing. I couldn't see any indicator work. The only thing I could see, which we have to do a topic on this at some point. The only thing I could see, which again is not necessarily price related, was the Elliott wave theory. I could see that.
Okay. I think I've heard this sort of logic before. And again, if we have people who are interested, please drop us an email. Definitely. Let us know. Maybe we'll do a session on that.
Definitely. I have another question from the good people who are watching us. Any trend lines and patterns lessons? Well, obviously, this is lesson 1 of patterns, but no doubt we'll do a webinar on trend lines as well at some point.
Yes.
Yeah. The other question is, how can we see the volume on a chart?
Most trading tools would have an option to add the volume as well. Let me see if mine will pop up as well. So if Mike is kind enough to show my screen again for a second, this section here shows the volume. This green and blue sort of bars. Most trading platforms have the option to show volume as well, to one way or the other. If not, go to TradingView, for instance. What else options available? Honestly, I just use TradingView, but I know there are some other platforms that have similar charts, and they would also show the volume.
Brilliant. Great question. Thank you for that one. Another one. This one is a great question as well. What pattern would you suggest to a newbie?
I would say double bottoms, double tops are the easiest to pick up and train your eye with that. Also, in general, horizontal and diagonal. Is that my pronunciation correct? Okay.
Correct.
These are getting there. These are quite easy to pick up as well. So I would recommend really start drawing the lines. Just play around with the system. Draw a line here, draw a line there. See what actually sticks. And then at some point, you're just going to start, seeing them even without drawing the line.
Yeah, you can you would just automatically, like we said at the beginning of this webinar, once you've trained the eye to see it, eventually you start recognizing these patterns quite easily. Yeah. So start off, play with it. By all means, double top, double bottom. Or probably one of the easiest to train your eye to. Maybe head and shoulders, which probably we'll discuss in part 2 of our pattern one. That's quite an easy one. Not an easy one. That's one to identify as well.
It's one to identify again, yeah. Agreed.
Yeah, it's quite easy. Another great question here is what pairs is compared to NASDAQ according to movement? So I'm guessing what pairs are correlated, said it probably, correlated with the NASDAQ?
Good question. Well, clearly US dollar with whatever pair it can be. Perhaps I would say some sort of safe haven currency, such as the yen and the Swiss franc. And the reason being is that NASDAQ tends to be it's technology index as such, right?
Yes.
And a lot of the technology companies, they tend to be pro-growth. They tend to be risk on. So whenever you start seeing a lot of liquidity in the system, you're going to see those companies performing well. Again, look at March, classic example.
Yeah.
So when NASDAQ is performing particularly well, most likely you're not going to see very strong yen and Swiss franc. Because these are more like risk off.
Yeah, so they're saying negative. These are negatively correlated with the NASDAQ. So if NASDAQ is going high, risk on, safe haven assets, Swiss franc, yen, etc., should technically go the opposite direction.
But for compliance purposes, I'm just going to say I have not done any correlation analysis. I have absolutely no clue what's the correlation coefficient between these currency pairs versus NASDAQ. Just using common sense, I would say perhaps NASDAQ being this very risk-on, tech-driven index most likely will perform well in the sentiment where franc is not doing really well because nobody wants to have safe haven exposure at that point.
Very true. Very true. And we've got one final question from the amazing people who are watching us. For a newbie, which one do you prefer to study? Fundamentals or price action? So what would you suggest for somebody just starting out? What do they study first? Fundamentals or price action?
Again, interesting question because one great technical trader whose course I've taken, Simon Reed, giving a shout out here, he says as a good technical trader, you shouldn't even watch fundamentals. You're better off just not watching the news because all you need is on that chart. Rather, the news can be noise. They can, think that, maybe US dollar is going to perform really well, but you look at the chart and it's, just fallen completely through the roof, not the roof, but sorry, the floor. So depends. What do you want to have? What are you good at? Are you good at looking at charts? Are you good at recognizing patterns? Or do you want to read? Do you want to maybe make connections yourself based on a lot of qualitative data versus the quantitative data that you have with the chart?
I think actually one of the first things we probably would suggest to anybody is identify what type of trader you may be. Because certain things, aspects, works for whatever trading style you have, i.e., like I say, maybe fundamentally for the intrinsic value, if you're a position trader, long-term trader, that sort of thing, certainly maybe on soft commodities, things like that, that becomes a very useful area to study. But if you're a scalper, swing trader, something like that, then obviously price action will most likely take front center stage with your decision making.
And I would just add, I find maybe technicals, not to say easier, but I would say they are lower hanging fruit, because you don't really need all the indicators. You just need maybe 5, 6 that you're really comfortable with, and you have, become used to. And then you can actually, trade based on these. Whereas fundamentals, first of all, there's gazillion of them. That's one thing. Secondly, they are very dynamic, meaning they change with time. Some things that were valid 5 years ago, don't make any sense at this point in time. Like we talk about, let me give you a completely random data point. US economy. I mean, it's in recession, right? I think we're going to have, I've forgotten what's the last number, maybe 2-3% economy contracting 3-4% this year. Look at equity markets.
Yeah.
Fundamentally, that does not make any sense.
Yeah.
But yes, here we are.
Yeah, exactly. Okay, I'm going to take one more question, because these people have been so nice today asking all these questions. There's one more question, and let's face it.
One more final question.
This is our favorite segment of our little show.
Of course.
And again, I think this could be something we could use in a topic for one of our later episodes. Is there advantage on trading just one pair?
Oh, interesting question again. Of course, I mean, when you talk about, let's say, institutional trading, for instance, you don't have traders who trade everything. Traders they specialize in something, not necessarily in a pair, but perhaps maybe in Asian emerging markets or G10 or G4, for instance. So even institutional traders, they specialize, but they're not overly narrow that they only trade one particular pair. So I guess my answer is, if I were to focus on a narrower group of pairs, I would probably choose those that have similar fundamentals, meaning maybe those that are considered as the same group of economies.
Yeah.
For instance, developed market versus developing market. If you really want to focus something, perhaps it makes sense to trade euro dollar, cable dollar, and, for instance, dollar yen, because these are all developed, very liquid, very deep capital markets. You're not going to have such liquidity problems you would have maybe with, I don't know, CNY, which is Chinese renminbi, right? So you're not going to have overly choppy chart that can be tricky for a new beginner, new trader.
Yeah, I think, like I say, I totally agree with it. Maybe certainly when you're starting out, I think, and you're learning, maybe focusing on 1 or 2 pairs and studying them and getting used to adapting them works. But what I'd say later down the line, I think one of the most valuable things when it comes to trading, in many ways, apart from obviously understanding the mechanics of it, is an idea. Is a trading idea, when a trading opportunity, that sort of thing. So I think down the line, beginning with, concentrate maybe 1 or 2 pairs, learn them, but down the line, open your mind up to other trading opportunities as well.
Of course. And again, the more you sort of expose yourself to other pairs as well, and not just pairs, but maybe other asset classes as such. Maybe you want to look at ETFs on US equities or something. Yes. I'm sure you can take the knowledge from that different asset class back to your initial pair or asset class, and sort of implement something that you've learned. So sure, there's no harm to look at very narrow group at first, or just one pair at first, but I highly recommend just to expose yourself to other things as well, because it will definitely benefit.
Yeah, totally. Keep your mind open, as they say.
Mind open, exactly.
Okay, well, there we go. Definitely wrapping up this time, because I think that was brilliant. Big, massive thank you to everybody there with all your amazing questions, and please keep them coming. Please keep the topic suggestions coming as well, because don't forget, we do these episodes for your benefit, and what you need to learn or what you want to learn, please let us know. On that note, do you want to say goodbye, Kaya?
Thanks everyone for joining. Always a pleasure to do these sessions. Again, Happy New Year from me, and we're going to speak again next Wednesday.
We will indeed. Don't forget, next Wednesday is the next episode of our Primus Live webinar series. Now, before I sign off, remember, these little episodes of ours are for educational purposes only, and in no way whatsoever should be taken as advice. I always suggest you do your research and do your due diligence, and of course know the risks at hand before entering any trade. Till next time, every single one of you out there, trade safe.